Hi, this is Anthony Parent of IRSMedic, and today we're going to have a little bit of a fun episode today. We're going to go over a lot of the mistakes people make with IRS Streamlined disclosures. It's a fascinating thing. I'm top expert in the field, if I don't mind saying so myself. Been doing this since 2009 is when I started my disclosure work, and very quickly through YouTube, actually, I became a bit of an internet sensation with my insights into this. A lot of people over time have taken my content and have used it for their own purposes. So you're talking to the real deal here right now. Anthony Parent, we're going to go over the mistakes that we see. And with me today is our firm's tax director, the great Michael Mellott, CPA. Michael is the MVP now as we we're moving through a lot of new things. And a lot of things of how we're going to talk about how streamlined disclosures have also sort of evolved from where they were originally. We're going to go over the mistakes we see time and time again. Good morning to you, Michael. How are you doing?
Morning, Anthony. Happy to be here.
Right on. I'm glad you're here too. And you've been with us for about 3 years now, so you've been seeing some pretty interesting disclosures, haven't you?
You could say that.
Yeah, you're surprised with what you've learned?
Yeah, I've definitely learned a lot. Didn't see too many in my previous firm, a little bit, but we see a lot.
Yeah, I have a little duplicate. Oh, sorry there. All right, are you back there? Did I lose you?
I'm here.
Okay, yeah. Sorry, I had the YouTube live running in another tab, so I was listening to myself. That's what I had to kill.
Okay.
All right, so great. Let's see. We got some people joining us today. Hey, good morning, guys. Hey, David. I just spoke to David a few minutes ago. He's having fun out there in San Antonio, Texas. And David was actually he's very interested in this international. He's thinking about international advisor land. And we have Andrew joining us today too. So Andrew, we're not going to be talking about common law too much today, but really we're going to be talking about, and I think, the indictment of sort of our government, because these rules are a little bit complicated. That's another topic. We're going to be talking about problem solving today, dealing with the mistakes people make kind of coming into this. So we want to just go some basics. What is the IRS Streamlined program? And by the way, you may be coming us from American Patriots Group, Keith Redmond's group. We have a lot of followers from there. If you don't join there, I have the link there. I want you to go there. If you're an expat, you're looking for some support, he's got a great group. So I want to just talk about, so Michael, what is the IRS Streamlined program? Can you tell us what it is? Can you read the slide for us?
So it's just a way when someone's not compliant. I'll kind of just summarize it.
Yeah.
Y'all can read the slide, but
yeah,
it's when someone has things that they either live in the U.S. and have assets abroad, or they live outside the U.S. and earning income, bank accounts outside, and they just haven't been reporting things correctly, but with some sort of international flavor. So they haven't been reporting things correctly. The IRS came out with some disclosure programs before, which you can mention if you want, but now this is the current disclosure program where you have to file 6 years of FBARs, 3 years of returns, and then an affidavit where you explain why you're not doing it willfully. And then the IRS considers you back in compliance. And two different programs. One of them is for people that are living outside the U.S. One of them is for people that live inside the U.S. The biggest difference is if you're inside the U.S., then you might be subject to the 5% penalty on some of your assets. So we'll go into that, but that's the main crux of the program.
Beautifully stated, Michael. Thank you very much for that. And the big push is because of the penalties and the threats of penalties, and really ruinous penalties. And that's really the thing that gives so many people the anxiety up at night. And hey, look, somebody might be watching this on replay up at 2 o'clock in the morning. Very common. And so we're going to go over it, and we help out. Look, it's not the end of the world. First of all, if you're and I think one thing. So we're going to go over the mistakes here. So I think let's get to the first one here. This is it. This is the mistake right here that I think flows right into it. And this is something that a lot of our channel content is focused on. The fear. The fear just blinding people to, I got to take care of this now, and I better give up everything. And this is where we see things fall off the rails. When our clients give in to fear, wrong mistakes are made. They're rushed into something. And this is something you really have to think about this. And, this is something that Keith Redmond helps a lot of people out with. And the understanding is not a lot of tax firms are like us, Michael, right?
No, we're actually on the client side.
Yeah. So we're a little bit different. And so one of the things that we do is we actually love our clients and we want to see the best for them. So we actually will look.
And we're not sycophants to the IRS.
Yeah, and we're actually not fans of the IRS. We're actually, we're always very respectful. We want to be effective, but we're not looking at them as the good guys. We don't think that you should just pay your taxes and shut up. We think you should be asking hard questions about why you're put in the situation, why you're feeling the way that you are. That's actually what we think, and we're really on your side. I'm always on my client's side because the government's always wrong. It's not a legitimate system. And that's really the thing. That's a separate topic, but that's really the point we want you to understand. That's why that's important to know. This isn't a natural thing. I think that what I see is that people are indoctrinated to think, well, and I think one of the things is the quote, taxes are the price we have to pay for a civilized society. One of the worst quotes of all time, Oliver Wendell Holmes, the same person who was all for the forced sterilization of people he didn't like. So he's the same one who believed in that. He was the one who said that, where I would say taxes are the reason why our society isn't so civilized, folks. That's the reason why. But anyway, I think that's the thing you need to get to. And I've seen this. I've been doing, I've seen this one, Michael. And I know I think you encountered this with our clients too. Is this need to like fall upon their sword? Like, look at this as more than this. Like, oh my God, I'm not in compliance. Oh my God, I'm such a mess. I'll just kill myself to avoid being attacked. I see that again. Like, no, let's just think about this in reality, that the U.S. tax system is so complicated, the IRS itself doesn't understand its rules. So for you not to understand this, it's perfectly natural. It's a natural human thing to make mistakes with the IRS. And that's actually why the Streamlined program exists, because there's so many people who have international. I think it's something like this. The stats of it are like this. There's $20 trillion held by Americans overseas. And then there's also about $30 trillion held in the US by people who aren't American. So the international aspect to the economy is sort of like, it's there, but then our tax code sort of like overcomplicates it so people actually don't know what's going on. And then this is what I say, when people like, well, they want to do something. One thing to watch out for is in the fear is that, you'll go in to do something more, you'll pay too much, and you'll pay someone too much for something that actually creates a problem bigger. And you really got to watch it, because I think one thing is the tax industry is against you. That's what people don't understand. Tax industry makes money because they lobby Congress to create obligations on you that require them to hire you. So it's a very, not really a great thing there. And that's sort of how it is. This is the point. The IRS has a problem. The IRS has massive noncompliance and few rules that employees can't understand. So the Streamlined program, it was first announced. This one was first announced in June 30th. Well, it was announced before. First became active June 30th, 2014. That's when it first came active, and it's still open. And I think it's going to stay open, because this is the thing too, right, Michael? We get repeat customers, right?
Yep. Believe it or not.
No, you can streamline. So I'd say that the number one, first thing is giving into fear. That's the first thing. And listening to that tax advisor who says you're going to go to jail. If someone tells you that, hang up the phone, or disconnect the Zoom call. Say thank you very much. Go away. Most of these, CPAs, attorneys have no criminal law experience. They've never been in a trial. They've never pulled a client out of trouble. We've been doing it for years. We've clients under criminal investigation, indictment, we've pulled them out. You can do it. And it's very unique. It's very rare to be the subject of a criminal investigation. So for someone to lead off with that, that's weird. That's bizarre. Get away from them. They're agitating you to get a fee. That's probably what they're doing. Most people are a million miles away from any criminal exposure. So if that's something that's brought up, understand that's there to totally convince you to hire them. Your real risk is the civil penalties and the uncertainty, I'd say, is your real risk. The uncertainty is a cost. So there's your number one. You got to be a little bit, you got to think a little sober and realize that not everybody's your friend here, right? The IRS isn't your friend. The tax industry isn't your friend either. You got to find someone who kind of is, right? Now, mistake number two. What do we mean by this? Using the wrong disclosure years. What?
Yeah, so it's especially when it comes to the domestic side, when you have the 5% penalty in play. With this, how it works is you can use the foreign side of the disclosure program if at least one of the 3 years for the tax returns you're abroad for most of the year. And so we have clients who they're living abroad, they come to the US and they don't realize that they're not in compliance from when they were abroad, and they come to us. So for an example for this is right now, if you have a streamline, you have to file 2022 through 2024. So if someone comes to the US in 2022, and you weren't compliant 2022 and you file it now, then if you can use 2022 and you were abroad for most of the year, then you won't have the 5% penalty because you're using the foreign disclosure program. But if you wait until 2025 so then your disclosure period is 2023 through 2025, then you would have to file a domestic one and you'd be subject to the 5% penalty. So that's the main thing is if you use the right years where you can use the foreign one instead of domestic, then you might save yourself the 5% penalty.
Yeah, and there's and I put up this because you and I encountered this one last year, and we were really heartbroken to see this because we were reviewing the disclosure work of another firm, and this was the dumb mistake they made. They didn't know what they were doing, and it just broke my heart when I saw the result. That they filed. The taxpayer came to them in spring of 2023 spring of 2023 to file a streamlined return. What they did is they filed an extension so that their 23 return wouldn't be due until October 15th. Then what they did is on July 15th, they filed a streamlined disclosure for years 2020, 21, and 22. And I still am so mad because if they didn't file that friggin' extension, it would have saved that client $100,000. And you remember she got that her pillar 3 I think got hammered because she took a distribution out, and if she just left 2020 off. It was a tax due because she was offshore. She had a tax bill. And if she just had a little bit, if that one extension was a difference of $100,000, and that's what we're talking about when you don't know what you're doing, you could really get a disaster like that. And there's nothing we could do after that. There was nothing we could do. I just tried to tell her sorry. And it's just, when you're dealing with people, and I mean, you're dealing with people, not everybody's a multi-billionaire. People are just normal middle-class people. Some are normal middle-class people, and $100,000 is a lot of money. That's a lot of money. And that for a lot of people. So that's just awful. So you have to be sure when you're making your disclosure years to use the right years, because we've seen big swings. And maybe, and in what you're mentioning is, hey, somebody might be able to qualify for streamlined foreign. In my case, I'm saying you might be able to drop off a high tax year. You got to be careful on that. So that you got to do some thinking about what you're doing. And those extensions can be very, very dangerous to do without thinking. Which is kind of related to this, right? No effort to reduce penalties, right? And this is when we're dealing with somebody who is, in the U.S. who's got to be subject to that 5% penalty. And these firms they won't lift a finger. Because here's the thing. Most people, this is what you'll hear from a lot of people who do the Streamline program. Any unreported account is subject to a 5% penalty, right? That's what they'll say. But is that true, Michael?
Not in our experience.
Yeah, and it's not in our experience. And how did we find out? Because we've been pushing back hard on streamlined disclosures. Don't want to tell you everything that we do. Want to leave some of it because a lot of firms take our secrets and misapply them. So I can't really say everything. But what I would say is we've been incredibly aggressive submitting streamlined disclosures. And perhaps there hasn't been more firms who've made inquiries into the streamlined disclosure hotline than ours to know exactly what the IRS is looking for. So, and I think that's one thing to understand about this program. It's not like, what is it? It's basically an IRS website. It's words on a website, so it's not a regulation. And so the thing is it can be a little loosey-goosey. And not understanding how it is loosey-goosey is basically the whole thing you're missing out on, because it's the gray area where the value is there. If it's a straight case, there's not much to do. You don't need a lot of thinking, but where things are gray, and most cases are gray that we're seeing, that's where you need someone who really knows what the IRS is after, knows the program inside and out. And as we said, I got to add up how many we've done. I know it's well over 1,000, and we've done big ones, and not one of them has come back. So that's really understanding what it is, and again, knowing what the IRS is actually looking for, going beyond what is given in a lot of, and again, and a lot of times, the tax industry gets its marching orders. They go to the IRS presentation. And I've gone to them too. The IRS will give a presentation. Oh, we're going to give a presentation about offshore disclosures. And the IRS is going to give this whole thing that's going to convince you, like, okay, I got to tell my clients, man, they need business. Like, well, no, not really. They're lying to you. They're not necessarily telling the truth. They're trying to get you to convince, to get everyone agitated, because it's cheaper for the IRS to convince the tax industry that they're going to do something than to actually do it. And there's a lot of that. So you got to really, and here, got to be careful what you're doing. Here we go. This is always one, right? You've read a lot of non-willful statements. How many, you've read not a lot of non-willful statements clients have written their own. Would you say that over-disclosure is the biggest problem?
Yeah. I would say they're always, clients, I always have to tell them, only tell the IRS what they need to know. So ours, we keep ours very short. I was talking to a woman yesterday about this, where she has multiple pages, just goes into this whole thing about her whole background. And it's like, okay, it's very easy to prove that you have no criminal intent. And you just have to give them a short background and then explain certain things. But you don't have to give them your whole biography. So that's the problem. You keep it short and sweet. And IRS, I don't even know if they read these anyway, but we obviously have the legalese that is necessary and that they're looking for. So
yeah, usually they read them, when they're selecting, when they examine. And the thing is, like, do you know you're certifying whatever that is under law? Do you know the ramifications of everything that you're signing, and then how that may be used against you later? That you want to make sure it's not giving them ammunition in this thing, and that's really the thing, because you really don't want to be. Yeah, there you go, Rob. There you go. Hey, thank you. There we go. Keep it simple. Thank you, Rob. Great to see you. Great to see you guys today. Thank you. So that's really the thing. Don't overshare information. And again, I think this is tied to slide 1 about the whole fear thing. Your fear, like, okay, I really need to explain myself, and you're over-explaining. Here, it's really simple. Here you go. What is 2.4 million words in the U.S. tax code? And there's 122 million words in the form of regulations, opinions, form instructions, memorandum, opinions, private letter rulings to explain those 2.4 million words or whatever they are. So we have the world's most complicated tax regime in the planet of all time. So there's your answer right there. Oh, and parts of it are written to the over 20th grade reading level. Okay. Lawyers graduate with 19 years of education, right? So this stuff is written beyond the scope of most attorneys. Just understand that. So look, there's your reason right there. Are you kidding me? And just consider the basic Form 1040 instructions are written to the 11th grade level. Okay. The average American reading comprehension is a 6th grade level. So there you go, right there. We don't need to go in. We don't need to go too far into that non-willfulness. Why? Because it's U.S. tax code. So be careful on that. Then this one, here we go. This is it. And I think number one is also doing this, right? I think mistake number 5, not thinking about life after disclosure. That when you let fear consume your decision so much, okay, just got to do disclosure, just got to do disclosure. Well, this is what we see. People are driven by fear so much. What happens? Oh, they stop filing. Why? What? Because they were so wrapped up in fear and distraction and fear of the IRS, they stopped filing. And now we get calls from people who maybe made a disclosure in 2016, 2017. They said, oh my God, I'm out of compliance again. Am I going to go to jail? Like, no. Did you do it intentionally? No. Well, what happened? Well, I had this tax professional and this fell off, and I had this happen. I couldn't do it. Okay, look, all we need is that you didn't intentionally do this. That's all we need to say. We do streamlines off of streamlines. And then we also do streamlines because the first streamline didn't disclose things properly. That's where I would say, and then thinking about life after disclosure, think about this. And this is something we show our clients, is that we will also do a look before you leap, right? Like, hey, what's disclosure going to cost me? We'll let you answer that. We'll answer that question for you before we do it. Whereas many firms like, well, we don't know. You got to hire us and we'll tell you how much you're going to owe. What? Do not do that. Do not do that. No. If you want to like, hey, look, I want to see what this is going to cost. Then the other thing too, what we will do is we give you a quote for what your tax prep is for that. So you can say, oh man, this international tax prep is expensive. Like, yeah, it is. Yeah. Do you want to do it every year or not? Because if you do the Streamline program, you're kind of committing to that. So if you can't commit to doing this each year, hey man, I'm not telling you not to do it, but just why you're doing it is sort of my point. So number one, when you're disclosing, you're also saying, yes, I'm going to be in compliance again in the future. That's also what you're saying. And then you have to continue with whatever you did. And then it's again, your problem isn't just the IRS, right? The problem is a lack of control in other things. Other things that you're seeing, like, problems you see after people do disclosure. Are there things that you see commonly, Michael, after people do disclosure? What happens? Like mistakes people do after they do it?
I mean, I think you touched on most of them, but it's really, they don't know the cost of having to prepare taxes each year. And these are most of the people with like offshore companies. And
yeah.
The 5471, those forms cost a lot. So keeping that in mind, but also we've talked to a lot of people recently who've had to do multiple streamlines. So as you said, it's just, they forget to be compliant again. So then they have to go through the program a second time. So yeah, as you said, it's just making sure everybody that you know what you're in store for and what you're signing up for.
Yeah, that's exactly right. And one thing that we're now what we're doing a lot too is, for our clients that we've done streamlined disclosures in the past, is now we're starting to get to estate planning for them because the same issues going on. And and honestly, here's the thing: is a lot of the tax implications are problems that are going to be coming down the road. And so I think one thing is that the same sort of habits that led to a streamlined disclosure being needed might be the same kind of habits that may create an international estate probate issue. So what I'm seeing is that people not necessarily thinking about what are some people like, yeah, I did my streamlined disclosure because I really want to renounce my citizenship. Like, okay, well, did you make any moves to renounce it? Well, wait. Oh, okay, that's fine. But you said you wanted to do that, but you're not going to do that now. Yeah, no, I don't want it. So sometimes it's not following through because it is complicated things. To create an estate plan when you live overseas, it's not the easiest thing in the world. And it's the easiest thing in the world to push off. But that's where we're seeing people miss out on tax benefits and not planning correctly. So I think that's something going on. Oh, one thing I should have added for number 6, I think, Michael, because we have other ways to resolve issues, right? It's not just the Streamline program. I should have maybe added that in a mistake number 6. Thinking Streamline disclosure is the only game in town.
Exactly. And not everyone's eligible for a Streamline. So.
Yeah. And I would say this too, you also want to look at what is your penalty exposure before you go into that. And because again, you want to look at your cost. What's this going to cost you to do? well, it's going to cost me due because I have this. But you want to really make sure you look at your penalty exposure and really sort of be comfortable. One issue that we run into constantly is sort of tax treatments on things, and we disagree. We believe, that the law is more the law and not the imagination of the tax industry. There's various people who are convinced any foreign pension is automatically a trust. And deserves the worst treatment whatsoever, and that there are no tax treaties that could possibly help anyone with their foreign pension, even though typically Article 18 of the tax treaties say that they're exempt from taxation in the U.S. Yeah, I get, you'll find that, and then I mention this all the time. You'll find tax professionals who will insist every single foreign mutual fund is automatically a PFIC. Very few tax professionals have gone through a PFIC audit. I have. I can tell you the mere naked ownership of a foreign mutual fund is not a PFIC whatsoever. Not at all. No, it is not. And you will not find anything on IRS.gov, anything in the law that will tell you ownership in a foreign or an investment in a foreign mutual fund is a PFIC. Yet you will find tax industry assuring it, and then that also has incredible tax. A foreign mutual fund, an 8621, a foreign mutual fund, you could be adding, $1,000, $2,000 to each tax return to do the work on it, which will then often make it so that Americans won't invest in foreign mutual funds because they're been told it's a PFIC when you actually find out, nope, there's nothing in there. The IRS has been asked to clarify it, and they won't. They say, nope, rules are clear. That's what they are. Because, again, there's nothing in the instructions to say it's a mutual fund, so you've got to watch out for that. Again, most of the tax industry listens to itself, and they listen to the IRS's press release without digging any further. And then also a lot of the mythology about the taxation of things, and again, we were there, came in the Offshore Voluntary Disclosure Program opt-outs. Most of these firms never did one. We did more than any other firm, so we actually understand how the IRS actually assesses things and what they're looking for in penalties. And so that's one of the things you got to watch out to. So if you're looking at all these forms, like, this doesn't make any sense, really. Is there really any harm in getting a second opinion? That's kind of one of the other, maybe that's another mistake. You're told something, it's like gave in the fear. Let's see what we got here. Yeah, right. So this is what it is. These mistakes really are a big problem here that can really cause disasters and make everyone miserable. And I guess, and I might, I don't want to mention any names of tax firms. I really, really don't. There are some out there that this is what I will tell you. Michael and I talked to a woman from New Zealand. She was from New Zealand, right? Yeah, she was from New Zealand. And she called someone who advertises heavily on the internet. And this one person runs this firm's entire offshore disclosure department. That helps you figure out who it might be talking about. Okay. This person, and we saw the communications, the attorney basically told her, if you don't take my suggested or demanded tax treatment, which will have you losing basically your fortune, I'm essentially going to report you to the IRS. That he was blackmailing her. And the tax, he had everything wrong. This person had no business. This person has no business doing it. And it's scary. It's really scary what you see out there. And there's other people there. One of them gave really bad advice. There was someone in about 10 years ago I had a little beef with online. He was giving bad advice for Americans with Australian superannuation funds. He was like, oh, here's what you do. File an 8833 for treaty exemption. I'm like, you're an idiot. You're an absolute idiot. If you're taking a treaty exemption on the pension, you don't need that 8833. What you're doing is you're alerting the IRS that you're doing this. And it doesn't make any sense because now you're doing other things that don't actually add up. And so he didn't like that. I called him out. So he hired someone to give us fake negative reviews. And you'll see those. You'll see those. If you look us up on Parent and Parent, you'll see these randoms rando saying, "Oh, this firm is fraud," and that's actually the thing you have to. That's how dirty some of these people are. So watch out for that. By the way, I can tell you his name. You can look him up. His name is John Anthony Castro. He is now in federal prison for filing false returns on behalf of his client. So that's the thing you have to watch out for. Really make sure you're dealing with someone who's ethical and on your side. I think is going to be the thing. You're probably better off with yourself than someone, yeah, you're probably better off with yourself. You're probably better off doing nothing, to be honest. If you're doing the wrong thing, that's the bad thing. Nothing is better than something that's not right. Something, yeah. So that's kind of what I would say on that. There we go. And now here we go. So here's your solution. Here we go. We have a simple call to action here, don't we? You know, if you are dealing with streamlined disclosure, you want a second opinion, you're thinking about doing it. By the way, I would say this too. Make sure, and I just want to put this up here. My good friend Keith Fredman runs this group. And I want you to make sure if you are a U.S. expat thinking about doing this, go to that, because you know Keith's site is more than just tax. It's about the whole lifestyle. You know, one of the things that, you know, I'm tight with this group. One of the things here is that most American expats are married to a non-U.S. person, and that creates a lot of strain. There's a lot of marital strain that the U.S. tax system creates, and that's actually the top reason why people renounce, is because it's there. Go there, check out Keith's group, and then you'll see that's a group. A lot of the tax sort of groups on Facebook, they're run by the tax industry. Keith's group is run by Keith. He's just a guy. He's just a consultant, you know, in Europe. He's living the life. Go there to get something that's really more based in reality, and that's what we like there too. Because when you have a client who's so fearful, they're really difficult to help. You need a client who's sort of like, okay, this is what we do. Yeah, this is what we do. When someone's like, oh my God, they're actually not a good client, and things don't go well. So we always prefer that people aren't coming in with all the fear in the world. Here's the reason why I want to do this. It makes sense for me to just have this exposure. I want to wrap it up. And a big reason why people are coming into compliance overseas around the world is they're expecting a large inheritance, and not being in compliance creates a problem with their siblings and the trust and things like that. So that's another reason why people are coming in compliance, or filing another Streamlined too, which happens a lot. So yeah, check that out too. And also I'm going to do a screen share of, I want to just go to our website right now to show you. I'm in the midst of making a switch to it. So just show you guys what you can do to get going right now. So here's our website. I'm doing a screenshot of it right now. This is currently, just go here, right here, and this button right here, get started. This will take you to this. This is going to be the form that will book. Just put your information here, fill this out. This will book a form for you. I will be switching the site over to this one. I'm working on it. I don't know if I'm going to get it done today. It's going to be slightly different. And it's going to be over here. Get started here. And actually, I'm calling it this. If you look at this, schedule your anxiety elimination call with us now, because I think that's actually the business we're in. So that's going to be there. I'm going to be switching out there soon. You can see our reviews here. And yeah, there's going to be some negative ones in there. You'll see 1-star reviews from competitors. Really cute. And Google won't remove them. So we do rely on our people to like us and to sort of, we're a little bit different than everybody else. I think that's what we have here. So I think that's about all we wanted to cover. Let's see what we got here. Borchelle, we got here. Borchelle's comment. Good morning to you, Borchelle. Yeah, exactly. There's people, you gotta be, the professionals out there really might not be on your side. You kind of want to know something about their ethics before you get there. Are they just there to get a fee out of you, or do they really care about, protecting family wealth is something that's pretty important. And protecting family is pretty, I like it. I really do. Do you enjoy helping people save massive amounts of money, Michael?
Of course.
Yeah, I know. All right. Anything else you want to close with, Michael?
I don't think so. Aside from, I did forget to mention that the Streamlined program, aside from the 5% penalty, which only applies for people that are filing the domestic procedures, it does remove all penalties. So the only thing you end up paying is interest. So that's the big reason why this program is so great. The IRS, for once, is actually fairly reasonable with this program. So if you're looking at, because if you miss an FBAR, that's $10,000 off the top.
Yeah.
So they just say, okay, you file these 6 years of FBAR, 3 years of returns, you're back in compliance. The only thing you have to pay us is any interest on taxes for the last 3 years. But all the years before that, they wipe it clean. So it's actually a very good program. Definitely we recommend it to a lot of people, not everybody, but we just need to speak to you, figure out your specific situation, and make sure it makes sense for you.
Yeah, and it's not a cookie cutter. Our streamlines aren't just a cookie cutter. There's real thought that goes into it, and there's so many things that go into the perfect disclosure, which is again there is joy to it, and in finding that solution. You see it work, and we've had some incredibly. I'm sure I'll make you qualify, Rob. You'll qualify. There's many of the I lost my Rob. You made me lose my train of thought. I had something important to say. Oh, these people! I love. We got a great audience. I love our followers. I really do appreciate all you guys. You've helped us create really some of the really address your needs, and it's wonderful to see the results of our efforts here, and to see how we're changing things. It's wonderful. So I think hopefully I can remember what I'm going to say. I'm stalling, by the way. You could tell this is how I stall. My attorney trick to stall is I'm trying to remember what I was thinking about, but it's hard as you're continuing this stream of consciousness to try to access this part over here where that thought was. But I'm good at filibustering for a bit. No, this is what I could do with the IRS all day long. By the way, I could do this for. Oh, it will come to me eventually. Anyway, we're gonna wrap it up here. Oh God, it's so close to me. There's one more thing I want to say about streamlined disclosures. Oh, good Lord, it's almost there. I guess I'm gonna have to give up. You know what? If you schedule your call, maybe I'll remember it. There we go. There we go. If you subscribe, maybe I'll cover it in another episode. So, and I do want to do that. We're going to be talking. We have a bunch more people coming up, so please subscribe if you haven't to the channel. And by the way, Michael and I are going to be discussing more of the technical things. We did the other day. We have a video up on whether you should check the box or regard the entity. I got a lot of content. We talk about sort of the foundations of our law, and we show how the IRS isn't really part of it, right? But we also do need to deal with the technical part. Look, because this is the way I look at it. It's like, yeah, is the IRS illegal? Yeah, totally. No offense. But what's your move off of that? Because if you're not ready to fully not comply, then what are you going to do? And that's like either do one or the other. Fully not comply or fully, or comply. Not half measures. That's sort of where I'm at. And so if you're not ready to make that decision, which I'm not either, I'll be honest, I still comply. How do you do it in a way that makes sense, that doesn't break the bank, in a way that can keep your sanity, where you're not feeling like you're getting beat up, and hopefully as we advocate for change to what's going on. So I would say that's one more benefit of supporting this channel, because we are the ones who are actually on the side of the people, not the tax industry, not the IRS. And so that might be the thing. That was not the thing I forgot to say, by the way. So I still suggest people to reach out for us if you are looking for help. All right, so with that, Michael, thank you so much for sharing your time with us today.
My pleasure, Anthony.
Right on. And do you want people to let's see here? Where's I had your banner up here. I guess I took it down there. Here's our website again, IRSMedic. Go there. We'll be switching over, but yeah, book a call with us. Happy to talk to you. And we really, this is often a family decision, by the way. Right? I mean, this is often a family decision. It's not just one person who could move on their own or do something on their own. We understand that. We deal with family dynamics all the time. We have our skills of persuasion to help people see things and get there. So, oh, great. Rob, you're emailing Tarn now. Awesome. Feel free, if you want, Rob, by the way, if you want to check out that form just to see how it works, where are you? That's wonderful. But yeah, you can email Tarn. Tarn will happy to take it. Tarn's my first employee. He's still with us. He's been with me for almost 20 years with us. He's been seeing everything. So yeah, he's a loyal, great guy. All right. So with that, we'll see you on the next episode. Thank everybody so much for watching.
Take care, everybody.